Well, it shows you how infrequently I do the program. I thought we were done. Michael Hainsworth here in for Mark Bunting with David Burrows, President and Chief Investment Strategist at Barometer Capital Management, North American Large Caps. That's the focus. Let's call this the bonus round.
Sounds great.
All right. Eva in Sudbury, you thought we were done, but welcome. Uh-oh, maybe she did think we were done.
Oh, hi.
Hi.
Hi. Anyway, I can hear you.
Excellent.
I wanted to ask about WestJet Airlines.
Mm-hmm.
I bought it with the speculation that oil is going down. I bought it in December, over 34 something 50, and now it's going down. It's $31. And just I want to know what's going on.
All right.
Okay. Well, Eva, I think that you're focused in the right space. You have to look for industries that have a tailwind in the current environment. I will tell you that the airline sector is performing extremely well as a whole. We own WestJet. We own Southwest Airways, LUV. We own Delta, DAL. When consumers have a little more money, they travel. When business is stronger, people travel. And we always benefit when prices of fuel go down. So these three things are happening right now. I think that WestJet is probably something you could buy here. It's pulled back from 34.5. It's 31.5. Nothing is broken here. Technically, the stock is just fine.
But as I understand it, the big spike was optimism that the company would be able to take advantage of cheaper fuel prices, but so much of its fuel is already hedged at previously established levels.
It is, but ultimately the win here is demand, right? Mm-hmm. And so I do think that the U.S. consumer is going to be stronger than the Canadian consumer. So I do prefer the U.S. Airlines to the Canadian ones. Mm-hmm. And if I had to pick, maybe I would pick Air Canada over WestJet. But I think that this sector is going to have a tailwind for a while. We do think energy prices are going to be low. We do think the consumer is going to have more money to spend.
A lot of love for Southwest there, as we see on the comparative graph. Eva, thanks for the call from Sudbury. Corey in Vancouver, hello.
Hello, and thanks so much for the bonus call.
Thank you for holding.
Mr. Burrows, I'm holding Amazon, and I wanted to know if you like its streaming play, if you're concerned about its social media angle, and would you hold it into earnings? Thanks so much.
All right.
So, Corey, this is a great sector, consumer discretionary, and I suppose you could fit Amazon into retail. We have 25% of our equity portfolios in consumer-related companies. Amazon is not one of them. I think the problem is there are questions around their ability ultimately to be profitable. And while people love management, they can only give them so much rope. So I think that there is concern that there continues to be investment in things that really don't generate a positive return. Again, going back to retail, I would prefer to look at a Home Depot or there's a number of other names.
You mean you don't think those drone deliveries are going to take off?
Well, look, that they are building a global dominant force. But when they're going to make money is a great question. And my big question always is, if the sector is rolling and the stock is not participating, why wait for that one hopefully to pick up? Look to one of the leaders.
To Corey's question about timing, however, quarterly results are due out on the 29th. Would you hold any stock or wait until after an earnings report to buy a stock?
So there's a lot of people that are really waiting for this earnings because, of course, the most recent earnings that came before was a big disappointment, right? So there are concerns about the cost of financing all of the deliveries over the holidays and so on. Now, there's not big expectations built in. So if they come with any kind of decent number, the stock could rally. I just don't like the technical setup in the stock, and I would probably move on before the earnings.
Q4 revenue expected to climb 16% to $29.6 billion, Corey, but the bottom line to fall 66% to 17 cents per share after bringing in 51 this time last year. Now we're going to take a break and come back with the top picks. See you in a moment.